Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and the Tulsa market. This is the 16th of December, and I should have done this on the 15th, but it gets a little crazy here at the end of the year. We get a lot of investors closing on properties before year end. So get a little out of control yesterday, but here I am today. Please forgive me. But let me talk about what just recently happened with the Federal Reserve. They just lowered interest rates again, short-term interest rates by 25 basis points, just like they did in October. And just like October, rates did not go down for mortgages. It's not automatically correlated when the Fed does this kind of work. This is short-term. So it doesn't necessarily mean that you're going to get lower mortgage rates. So they're still hovering for investors with 25% down at about 6.5%, plus or minus. That's par rate, no points. So the problem is that, that really hurts positive cash flow. In fact, I've talked to investors who have invested in other parts of the country, and they're talking about $300 to $400 a month negative cash flow. Personally, I don't want to depend on appreciation to kind of get my money back that I'm coming out. I don't like to lose money. This is what I like about Oklahoma. Oklahoma has pricing, a 4-bedroom home that's 1,700 square feet brand new for $250,000. Even lesser expensive, like 1,420 square feet for $225,000. So, I want to combine cash flow with appreciation, and the problem is the interest rate. But what builders have been doing is understanding the problem. They want to make sales. And so the large builders can buy big packages. In other words, they're putting out $40 to $60 million at a time to buy packages of Fannie Mae loans, FHA, VA loans to give you a much better interest rate. So instead of the 6.5, they're allowing you to get down in one builder to 5.25% fixed, 30 years. Another builder, 4.99% fixed for 30 years, or an adjustable rate mortgage fixed for 7 years at 3.875, and even lower rates for owner occupants. So this is really spurring on the market. And my problem is what the Fed said, not just what they did, which is we're only anticipating one more reduction next year. They are concerned about inflation. I know one of the things they're concerned about is companies are not absorbing all the tariffs that they were absorbing to keep their prices in line, and now they're passing it on. So we haven't seen the inflation yet from tariffs until now going into next year. What that means is higher rates, because that's what one of the things, the big thing that the Fed focuses on. So the problem with that and the fact that we're paying right now $1 trillion a year just for debt service, not to reduce the deficit, but just in paying the interest. And that is going to keep going up because we're running $2 trillion deficits every year. $5 trillion now is the estimate of the big, beautiful bill over the next 10 years. Then the other problem is if you have to keep floating more and more treasuries to keep the government going or mortgages going, then the problem is you've got to give higher and higher yields. I'm an investor in fixed incomes, and so I want 4.5 on a 10-year treasury, not 4. And if you're a country or an institution and you're buying $100 million worth, you want that higher yield. That is going to affect you. In other words, that is going to raise rates. And what that means is you better be buying pretty damn quickly if you're a real estate investor. These rates are going to go up. Don't expect things to get back to COVID levels. There's no disaster here. Inflation is here to stay. Rates are not going to go down. If they do, they're barely going down. Take advantage of 5.25 or 4.99 now. It's going into the new year. I don't know how long it's going to last, but I think the window is closing very soon for real estate investors that don't just want appreciation, but want positive cash flow. We have those properties for you now, starting at about $225,000. Let us know. We'll be happy to take care of you.